All right. Well, welcome everybody. Welcome to another show. My name is Senge, and the entire purpose of this show is to help you turn your trading into profit measurably and consistently, and hopefully exponentially. That would be awesome. Now, my mission here on this show, and for me personally, is to do so much good for the currency trading community that we single-handedly have a positive effect on the American economy. So I know that that's a pretty lofty goal, but you know what? If you're going to have goals, might as well be big. So if I could get you to do me a favor, one thing I'd love you to do is to go ahead and share this stream for me, this video. So if you wouldn't mind, please share the video. I would love that. And just give me 1 second, guys. There we go. All right. So how is everybody doing today? Just to let you know that we are live over on Facebook and YouTube. But if you want to go ahead and leave questions, ask questions, and leave comments and so forth, I encourage you to go over to karmasenge.com/live, and you can watch the stream there, but you can also interact with me as well. So you can ask questions, you can leave comments, you can put hate mail on me. I don't care. You know, I can deal with that. But that's what I encourage you to do. So please go ahead and go over to karmasenge.com/live. I should have a text somewhere in this, but I don't. And we can go ahead and have a conversation as opposed to this being just a one person to one person thing. So I was having a little bit of issues with my tech stuff here. I'm not the best techie guy. I mean, I can do a lot of tech stuff. I can build some simple websites, and I can deal with what I need to do. But all this new technology of putting sharing my screen and even just coming on this video, it takes work for me. So don't hate on me for getting some things wrong. Now today, I am actually going to be talking about the Gartley pattern. I have gotten multiple emails in the past week from people asking me how to identify Gartley patterns properly. So I thought I'd go ahead and do a video on it. Now, I'm not going to go over things like stops and targets. Yeah, that would be for another video. But just how to actually identify the Gartley pattern. What are the rules for the Gartley pattern? So I'm going to go over how I trade it. This is not necessarily how everybody in the world trades the Gartley pattern. This is just how I identify it and how I trade the Gartley pattern. So what I'm going to do is I'm going to actually go ahead and cut over to my screen now. I'm hoping everybody can see my screen. Give me a heads up in the chat if you can see my screen. And if you're over on Periscope, go ahead and, because this is also streaming over to Periscope, go ahead and give me a couple of likes there. I would love that. Thank you very much. So everybody should be able to see my screen, and everybody can see my screen, so that's awesome. All right, so yesterday, or the last time that we did a video, we talked about impulse legs. Now, identifying a proper impulse leg is actually number one rule of identifying a Gartley. So what we discussed, there was 3 rules to identify an impulse leg. The first rule was, 1, it had to break structure. So if we're looking on the screen here, and we can see that this leg here, this line here represents price action move, all right? We can see that it's broken the previous structures that came before it, all right? So that's met rule number 1. Rule number 2 is that it had to be followed by at least a 38.2% Fibonacci retracement. So here we can see this retracement, and if we pull out our fibs, we can see that it has gone past the 38.2. All right, so we now have the first 2 rules met to identify an impulse leg. Number 3 is it has to be pretty obvious. All right, this leg right here is really obvious. It just kind of sticks out like a sore thumb. And that's really what you want to identify, is have it stick out like a sore thumb. So the first two rules are quantifiable. They can be measured. Whereas the second one is kind of subjective. There will be some people that will not be able to really see this, and it won't pop out at them like a sore thumb. Instead, they're going to have to really look for it. Whereas if you take enough time, you back test patterns, you're going to see this pop up over and over and over. So it'll become very, very apparent to you very quickly. All right, so we have our first rule down for the Gartley pattern, and that is identify a legitimate impulse leg, all right, or a proper impulse leg. All right, now, when I start my, I guess you can call it rule number 2 for the Gartley pattern, is that the Gartley pattern starts at the very beginning of the impulse leg, all right? It will not start somewhere in the middle, all right? So if I actually remove this impulse leg, I'm going to remove this impulse leg in this retracement real quick, all right? Now, an impulse leg doesn't necessarily just go boom, and it doesn't just go straight up, all right? Sometimes it does, sometimes it doesn't. You know, maybe it'll do this, and then from here it'll retrace a little bit, go up again, retrace a little bit, go up again. It may do something like this, all right, before taking that retracement past 38.2. All right, so we can see here that there are multiple levels. Now, none of these two levels in the middle are the start of the impulse leg. All right, Gartley patterns and bat patterns, for me at least, always start at the beginning of the impulse leg, never in the middle. Never, ever, 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 ever in the middle. Right? I know a lot of harmonic pattern traders will start, you know, if there is a some harmonic trading software that will point out that this is where the start of the pattern lies. So let's say, we have, something like this. Someone will believe that this is a pattern here. All right. For me, it's not. For me, it's never starts in the middle of the leg. It always starts here at the beginning of the leg. So even if there's some very minor retracements within this leg, this entire thing right here is the impulse leg. Okay? The entire thing is the impulse leg. And the patterns always start at the beginning of the impulse leg. Okay? I hope I pounded that in to you, that it starts at the beginning. And I'm going to say it again. It starts at the beginning of the impulse leg. I'm not afraid to say it. All right. So now that we met the first two rules, we've identified a proper impulse leg, and we know that the Gartley pattern starts at the beginning of the impulse leg. All right. Number 2 is that the retracement here, all right, has to be at least a 61.8% Fibonacci retracement. So how do we find this out? All right. So what we're going to do is we're just going to go ahead and grab our Fibonacci retracement tool. And we are going to drag from the very beginning of the impulse leg right here to the very top of the impulse leg. And we're just going to pull this over, all right, so that we can get a really nice, good, clean look at this. All right. And this particular retracement has to be at least a 61.8% Fibonacci retracement. As we can see, it is right here. Now, I have a rule that the retracement can be between 61.8% and the 707, all right, which is this kind of grayed outline right here. But it cannot exceed the 707. If it does, I do not consider it a valid pattern, and I'm not going to go ahead and put on that trade, all right? You will have a lot of people that will, as long as it doesn't touch the 78.6%, they'll go ahead, they'll call it something like a deep Gartley. So if you ever hear a deep Gartley, that's what they're talking about. All right. But for me, harmonic patterns are very precise. They have to be very, very precise. So we just give them a little bit of a window, which the window is right here. That's all the window for that B point retracement that we're going to have. All right. Now, to talk about the points, all right, the beginning of the impulse leg is what we call our X point. So I'm going to go ahead here and just type in X. Oh, I don't know what this is doing. Let me go back in here. All right, so this point here is our X point. The very top, in this particular instance, the very top of this impulse leg is what we call our A point. All right, let me get my tool to actually work. The problem is actually my mouse, not the software. So there we have our X point, we have our A point, and now we have our B point. All right, the B point is one of the most important aspects of pretty much any pattern, is the B point. All right, so we have our impulse leg, our initial impulse leg, all right, that strong move up, and we have our B point retracement. From this point, we're now going to wait and see what happens with what we call our C point. All right, now the C point is going to retrace from this position, and it's going to move up somewhere between a 38.2 and an 88.6% retracement of the AB leg. Not the XA, but the AB. So now we have to grab our Fibonacci's again. All right. And we're going to go from our A point here, and we're going to drag it down to our B point, wherever the ending point is of that particular retracement. All right. And this goes all the way to the wicks, guys, not just the candle bodies, to the very tips of the wicks. All right. Here we see that now we have, something, it could be anywhere between a 38.2% and an 88.6% retracement. All right. So anywhere within this area, it's okay. All right. For this to go ahead and turn around. All right. So at this point, let's say we have another 61.8% retracement. So this is going to be our C point. If I can, again, get this working, that's our C point. Boom. All right. Now, for me, as this starts to come back down, all right, I don't necessarily start planning the actual pattern and so forth until it gets somewhere around the B point. All right. So as it starts to move back down to this direction and it gets somewhere around the B point, that's when I really start to look at the pattern. I start to really analyze it because, I didn't know what was going to happen. Maybe this C point kept moving up, or maybe we had a really shallow retracement, here, and then it continued off in this direction. I don't know. All right. But I'm aware of it. All right. I'm aware that, hey, this looks like it could potentially, the retracement could be right here. And actually this retracement doesn't even need to have started yet. Right here, I'm already looking at, I got a 61.8% retracement, Gartley pattern, attention, Gartley pattern. So I'm looking at this already knowing that this could potentially be a Gartley pattern, but I'm not really planning anything yet. All right. Once I get another retracement down to our D point, all right, and it starts to get somewhere around the B point area, that's when I really start analyzing the pattern. All right. A lot of people that trade harmonic patterns, they don't do this. All right. All they're wanting is the pattern, met? Does it hit the D point? And let me go ahead and enter. It's a pattern, so let me go ahead and enter. So all they're doing is actually analyzing the pattern itself, the actual ratios of the pattern. But they're not analyzing the market. They're not analyzing the price action. They're not analyzing, any fundamental data that's coming out. They're not analyzing trend. They're not looking at anything else except for the ratios. And I guess this is what makes me very different in that I'm analyzing absolutely everything. I don't enter every trade that I see. Every harmonic pattern that comes up, let's say that, 10 pop up, I might take 2 or 3. I'm not taking 10 of them. I'm not stupid, And because of this, I have a much higher win ratio simply because I'm analyzing. I'm not just going, oh, well, there's a pattern, let me put it on. That's a really good way of losing money. A really good way of losing money. So I don't do that. I have to analyze everything. All right. So now that we've got this, let's get back to it. Now that we've got this particular retracement, what we're looking for is an entry position. All right. Now, traditionally, the entry position is at the 78.6% Fibonacci retracement of the XA leg. So the initial Fibonacci ratios that we laid out, that's what we're really using traditionally. All right, so we would actually enter the 78.6% Fibonacci ratio to go long. All right, because we believe that. Let me go ahead and get my arrow tool. We believe that price is going to move off in this direction. All right, that's really nice, to think. All right, to plan, but I don't necessarily take at the 78.6%. All right. Sometimes I do, sometimes I don't. And I'll explain it here in a second. All right. So let's say we have this retracement. All right. We have our B point retracement. We have our XABC. All right. It's coming down here to the D. Where do I enter the trade? All right. So where I plan to enter the trade is one of two positions. It's either going to be at the 127 extension of the AB. So how do I find that out? All right, so I'm going to go ahead and grab my Fibonacci extension tool, and I'm going to click up here at A, go down to right where the end of the B point was, all right, the very, very tip of the wicks, and then back to the A point. And from here, I'm just going to, pull this over, but it's in line with A, all right? And what I'm looking for is this 127 extension. All right, that's where I am going to enter the trade at. Now, I only enter at the 127 if it is between the 78.6% and the 88.6% Fibonacci retracements. All right, so these two lines you can see in blue. All right, these are the original Fibonacci retracements of XA. If it falls between the two, then I take it at that 127. If for some reason it falls before the 78.6 or after the 88.6, then and only then do I enter in at the 78.6%. All right. So my initial plan, though, is to enter here at the 127. And of course, my plan is for this to go long. All right. Now, I'm not going to necessarily talk about stops and targets, where to place stops and targets right now, but we'll get into that in another video. But right here, let me grab my nice little Fibonacci, or my nice pattern tool here. Right here, we have a really nice looking Gartley pattern. All right. Now, the D point as well has to be, in this particular instance, below the B point. All right, that's another rule of identifying proper Gartley patterns. If you see a Gartley pattern and the Gartley pattern, let's say is the entry point here is here, all right, which in this particular case is above the B point, then that's not a valid pattern. All right, it has to be beyond the B point. All right, so let's actually look at this on the charts. How does this look on the charts? All right, so let me actually go ahead and get rid of all of this, all these drawing tools. Remove all drawing tools. Bloop. All right, and let's come down here into the market. So here we're looking at just regular price action. All right, price is down, it's up, it's down, it's up. I mean, this is the natural ebbs and flows of the market. All right, but here I kind of see something start to emerge. All right, so right here I'm looking at this particular leg. It moves up quite drastically. All right, does it break structure? So we need to know, to identify the impulse leg, does it break structure? And we can see here, right here, that of course it breaks previous structure. All right, So rule number 1 has been met. Rule number 2, is it followed by a 38.2% Fibonacci retracement? All right, so we grab our Fibonacci tool, go from the very, very bottom of that wick all the way up to the top of this wick and pull over. And we can see, yes, it's been followed by at least a 38.2% retracement. In this case, a 61.8% retracement. All right, so now we have identified the first 2 rules. Number 3, it's pretty obvious. At least it's obvious to me because I've spent a lot of time in back testing and forward testing and live trading to identify these. So here we have a nice impulse leg followed by at least a 38.2% retracement. Okay, so that's rule number 1. Rule number 2, all right, of course, Gartley patterns start at the beginning. But for Gartley patterns specifically, is there a 61.8% retracement? Yes, that has been met. The next rule, has it touched the 707? No. All right, the B point has not touched the 707. So therefore, for me, my rules, it is still valid. Okay, so now we're looking for, we have our X point. Let me go ahead and write this out. So here we have our X point. All right, that is our X point there. Here we have our A point. All right, so there's our A point. And then now we have our B point finally. If my tool will work, hello. All right, we have our B point. So there we have our X, A, and B point. So now we have to look at our C point. All right, our C point, we have to identify, does it have at least a 38.2% retracement? Is it between 38.2 and 88.6? So we grab our Fibonacci retracement tool and we drag from A to B. All right, the very tip of A all the way to the very tip of B. All right, and I'm just dragging this over so it extends out more. All right, and we can see, yes, it actually touches the 50% mark. Okay, so now we have our C point. All right, so here's our C point. All right, and for me, I just got the extra Fibonacci out of there just so it kind of cleans up the canvas and we can actually see what's going on. All right, so now where are we going to enter at? The very first thing that we need to do is identify where that 127 extension comes in. All right, so we grab our Fibonacci extension tool. We go from the A point to the B point and then back to the A point. But again, I'm going to just bring this over and it's going to be in line with that A point. So we can see this line is very even with the A point. All right. And we can see where this 127 extension comes in. It comes in between the 78.6 and the 88.6. So therefore, that is where my entry is going to be. So if we draw this out, this pattern out with our nice little pattern tool here, we have a really nice Gartley pattern. All right. And this Gartley pattern does work out. I actually made quite a bit of money on this one. But that is how we identify Gartley patterns. And you're going to want to back test these rules, of course. You know, there are a lot of different variations to the rules. These are just my particular rules. And again, I'm not showing where we take targets or where we put our stops, but that's really the basics of how I trade the Gartley pattern. Very, very simple pattern to identify, and it's a very consistently profitable pattern at that. So it's probably my favorite pattern. I have my own pattern actually, which is called the Karma pattern. But even over that, like I love the Gartley pattern because it's incredibly consistent. I consistently get anywhere between 75 and 80% win rates with the Gartley pattern. With other patterns, it'll fluctuate more. You know, right now my bat pattern sits at about a 62% win ratio. Last year, between all of last year, 2016, my bat pattern was sitting somewhere around 68%, with my Gartley pattern year after year sits around 75 to 80%. So, that is why I absolutely love the Gartley pattern. I absolutely love it. So that is a Gartley pattern. Does anybody have any questions about the Gartley pattern? I'll go ahead and wait a second here. I have lots of different sources of where these chats are coming in at. No? Okay. So if you have any questions on the Gartley pattern or really anything else, you can always go ahead and give me a shout. Send me an email, karma@karmasenge.com, and I would love to give you, any type of answers or help I can possibly give you. So again, that's the way I trade the Gartley pattern, and that's pretty much all I've got for you guys. So until tomorrow, then, I encourage you to take absolutely everything that you do in trading to the next level. Good luck and happy trading, guys.